Now I am going to show you how to answer final exam December 2019 question 3 on investment property. Question 3A, state whether the items given below are classified as IP in accordance with MFRS 140 investment property. So for this question, you just mention whether it is an IP or not. So number 1, okay, A1, land held for short-term sales in the ordinary course of business. So the answer is not investment property. Okay, question 2, a building that is vacant but is held to be leased out under one or more operating lease. So this is investment property. Okay, we move on to part B. Bauso Property Berhad is a local company based on KK Sabah. On 1st January 17, it acquired a piece of land and 10-story building. So you have two assets here. You have land and you also have building. So if I jot down the information on 1st January 17, so we have land of 2 million and also building 8 million. Okay, a trade discount of 10% of the purchase price was given on the acquisition of the building. So trade discount for the building 10%. Okay, for this one. Legal and registration fee. So this one can be part of the initial cost. So legal cost is 250,000. Okay, was also incurred in connection with the property. So when I mention property, it means that land plus building, of which 20% is related to the land. So that means you have to split 20% is for land and 80% is for building. So if you times 20% on 250,000, you should get 50,000. So the balance goes to the building 200,000. Okay. The land is currently being held by the company for long-term investment purposes. So the land is IP. Okay. As for building, the company used the ground floor as its main office and the rest of it was rented out. So remember, when one building is used for two functions, you have to check whether they can be sold separately in order to recognize them separately. Okay, we have to find the condition here. Each floor of the building cannot be sold. So this is the condition. When it cannot be sold, that means you cannot recognize them separately. Okay, you have to recognize them either PPE or IP. So since you see that the most part of the building is rented out, of course it will be recognized as an IP. So this is also an IP, but when you answer later on, you must make sure that you mention about this condition, okay, in order to recognize it as an IP. The total monthly rental received, so because you rent out, so you receive a rental income 350,000. Okay, you will need to use this information if the question asks for SOPL. Otherwise, you just an information, you don't have to use it anywhere. Okay, and the useful life of the building is 20 years. So we have jotted down all the information. Okay, so this is the fair value of the land and building, and the company adopt the fair value model in measuring the IP. So remember, when I say for fair value model, you will have no depreciation. We don't calculate depreciation on the building because the company is using a fair value model. So now, if I draw the timeline, okay, based on the information, so make sure that you split land and the building. Okay, land is IP. So on 1st January 17, the initial cost is the purchase price of 2 million plus 50,000. Okay, so purchase price is 2 million and legal cost 50,000. So the initial cost is 2050. So given in the question, the fair value on 2017 2.5 and 2.4 for December 2018. So I'll put it here. Okay, 31st December 17. Okay, tak perlu panjang sangat lah because there's no depreciation kan. Okay, 31st December 17 and also 31st December 18. So the fair value on this date is 2.5 million, okay, based on the question, and here is 2.4 million. Okay, now for building, so building is also an IP on 1st January 17, and then you have 31st December 17 and also 31st December 18. So on the date you acquire your building, the purchase price given is 8 million. You have to deduct with the trade discount 10% and you need to add the legal fee. So the purchase price, So the purchase price of the building is 8 million. Less the trade discount 10%, so you get 800,000 here, and then you add with the legal fee 200,000. Is that correct? So you should get 7.4 million. So this is the initial cost of the building. So given in the question, the fair value 7.8 and 8.2 for the building. So this is 7.8 million and the fair value here is 8.2 million. Okay, so that's the information, and the question says fair value model. So of course, land you never depreciate, but for building you have to jot down here fair value model, no depreciation. This is compulsory to write down as no depreciation to avoid you from calculating the depreciation. This is just a reminder to us that we don't need to calculate the depreciation. So let's draft the information first, because the question asks us to prepare the accounting treatment for both properties, that is land and building, for the year ended 31st December 17. So before we answer that, we need to draw a story here, okay, because it really helps. Okay, so the question asks for 31st December 17, and then okay, just check the next requirement is prepare journal entry for both properties for the year ended 1st December 18 to record the changes in the fair value. So let's do some calculation here. This is a fair value model. Okay, so you just carry 2.2050, you just carry it here. This is the carrying value 2050. So the difference, you see the fair value is more than the CV, therefore this is IP. When fair value is more, we call it as gain. Okay, gain on fair value. Okay, the difference is 450,000. So this gain will go into SOPL. Okay, next 31st December 18, the fair value here will become the carrying value 2.5 million. So here the fair value is less than the carrying value, therefore we get not deficit, because this is not PPE, this is loss on fair value. So the loss is 100,000. Okay, and loss goes under SOPL as well. Okay, that's done for the land. Okay, for the building. Okay, now, did I miss reading the question? Okay, so building, because you are using fair value model, so there is no depreciation. So you just carry this initial cost as a carrying value here. Okay, that's why I mentioned previously in my video, I like fair value. Okay, because you don't have to calculate depreciation. Okay, so this is, the difference is 400,000 because fair value is more. So we call it as gain on fair value. Okay, next, move on. This is fair value. We will carry as a carry value on 31st December 18, 7.8 million. So the difference is 400,000. So fair value is more, therefore this is also gain on fair value. So this one go into SOPL. This one also goes into SOPL. Okay, so we have done the draft here. So we are going to answer the question. What was the question just now? Discuss the accounting treatment for both properties for the year ended 31st December 17. Okay, so based on in here, okay, what you need to do, you have to, firstly, you have to mention on 1st January 17, okay, about this initial cost, and then you have to explain why you need to recognize this land as an IP. So when I answer this question, make sure that you check with the question, because I'm unable to show you the question while answering. Okay, I'm not able to show it together with you because all the information given here, okay, for example, for the land, it is currently being held. This information will be used in our answer. Okay, so please check. Okay, please check with your question. So part 1. Okay, the accounting treatment. So firstly, I will answer for land. Sorry, okay, make it bigger. Okay, so for land, alright, I would say, okay, now you are referring to your timeline. Okay, I hope that you draw the timeline together with me just now. Okay, so land, you need to answer the accounting treatment for the year ended, for the year ended 31st December 17. Okay, so we are just focusing on your timeline from 1st January until 31st December 17. So here, okay, here you would say on 1st January 2017, the land is recognized as investment property at initial cost of RM 2050. Okay. Okay, make sure you put them in bullet because it will make it will make it easier for me to read your point. Okay, and it will be very clear what to answer in the question. So on 1st January 2017, the land is recognized as investment property at initial cost of 2.05 million. Okay, so you have to give reason why you want to recognize it as IP. This is because it is an IP because the land is what? Follow the question. It says because the land is held. The land is held for long-term investment purposes. Is held for long-term investment purposes. This one I copy just from the question. Okay, so next we will talk about, okay, now remember we have already shown the calculation here. So when I answer, I don't mention about the calculation anymore, how I get 2.05 here, because I've shown the working. If you do not show your working elsewhere, you must show your working in here. Okay, meaning to say I should be able to see how you answer, how you get those figures. Either you put it in here or you put somewhere outside the answer here. Okay, mesti ada jawab, mesti ada working. Okay, sekejap, let me check first. Okay, now next one, we are still in 2017 for the land, so we have mentioned this, so we need to talk about what happened here on 31st December 17. Okay, so we continue on 31st December 2017. Okay, the fair value of RM 2.5 million is compared with the carrying value of RM 2.05 million. Okay, the difference was, we call it as gain, right? Gain on fair value of RM 450,000, okay, to be credited into SOPL. Okay, so that's it for the land on 31st December 17. Next we go to the building. Okay, so for building, okay, we have to talk about this one, and then we have to mention that because this is using a fair value model, there is no depreciation charge, and then you have to talk about what happened here. Right, so firstly we will say on 1st January 2017, just follow the structure of the land. Okay, the building is recognized as investment property at initial cost of RM. Okay, berapa tadi? 7.4 million. 7.4 million. Okay, you have to explain, justify why you can recognize that building as IP, even though part of it is used as office. Okay, so alright, so you have to mention the whole building is recognized as an IP because the portion that is used as office, is it? What did the question say? As office kan? Okay, the portion that is used as main office cannot be sold separately. So kita dah jawab yang tu kenapa. It justify why we recognize it as NIP. The whole building is recognized as NIP because the portion that is used as main office cannot be sold separately. Okay, right. Next, we will talk about since the company adopt fair value model, therefore, no depreciation is charged on the building. Tak payah cakap on the building pun tak apa. Okay, and then we continue compare on 31st December 2017 the difference between the fair value of RM berapa tadi? On 31st December 17, 7.8 million. 7.8 million. Okay, the difference between the fair value of 7.8 million and the carrying value of RM 7.4 million, okay, is a gain on fair value of RM 400,000 to be credited into SOPL. Okay, so this is the timeline. So I'm sure that you have drawn the timeline together with me just now, so you can refer to your timeline. So this is the one that I mentioned here in the answer. Okay, you see that you can have a different way of answering. For example, just like the land, I make this sentence like this, and then I talk about the difference. Or you can straight away put it like that, the difference between the fair value, but you need to mention what is the fair value. You don't just say fair value without the number. You must have the number, and the carrying value, you also have the number. So the difference is gain on fair value of 400,000 to be credited into SOPL, because gain is a revenue. Of course, you need to credit. Sometimes I notice students make a mistake. They mention gain, but they say to be expense of. Salah lah. You have to understand the concept, yeah. Okay, so that's done for that part. Okay, so let's continue part C. Okay, part C in the next video. Thank you.